Good afternoon, Impulse Traders. It is 3:40 Central Standard Time. This is Dan Hussey bringing you our daily strategy and week-ending update for ImpulseTraders.com on July 1st, 2011. This kind of ends the start of, well, it begins the start of true summer doldrums, in my opinion, or at least it should. Next week will be anemic volumes. It will be slow trades in almost every market, as a lot of markets are in, most of the world markets are in some form of holiday and or kind of out to lunch, and at least the U.S. is. And we won't see much true volume return, until really, late August, after this weekend. So, with that being said, we saw what CNBC loves to call. Let me bring up the S&P 500. CNBC loves to call window dressing today. So we had a great, unbelievable rally off the 1250 lows. Can't say we were surprised at all. The 1250 area held the 200 daily moving average, as well as our 1259 measured move that has a 1385 target that is still unfilled. But in reality, I think we're targeting about 1430, and to be quite honest, I think much higher than that now. Excuse me. We ripped out today. I mean, it's been a while since we've had a rally this strong. Volume might be light, but price action is price action. There are no shorts until long targets well above us. So don't be silly. Don't sell this market. I know we've got some Australian dollar shorts and sterling shorts on. I'll be perfectly frank. I think they're quite risky. But there is the possibility, because of this strong of a move we had today, that we do get a substantial pullback before we continue higher in another really strong leg up. But right now the trend is up. It's been up for some time, and we've never doubted it for the past few months. So with that being said, the S&P 500 closed at its highs today, and I anticipate us going higher. Risk trade, New Zealand dollar. We have just ripped off of the 80 level, and we maintain our 84 targets, at least 200 pips above. And in reality, we could be heading to 86. So just keep that in mind with the Kiwi. Aussie dollar, we are short, and we're gonna try to get off this short pretty much as soon as possible, I think, because I do believe we now are in our fifth wave up. But I do want to point out that, and like we've said, that this X wave here could be here, and this could be a C wave up. Hence the reason we're short. So there is, we're not short just to be short. We're short because there is actually fairly valid wave count and rationale behind this short. Crude oil daily bounced off a trend line, still heading higher. 120 long-term targets. I trade crude on a very short time frame, but I am biased higher, and I think we all know I'm biased higher based on the way euro and crude work together. Crude and euro kind of diverged, and we've chopped around, but as you can see, relatively speaking, they're pretty much at the same area. So they've caught up to each other, and we'll see how these two interact next week. Before we go on to talk about euro, I want to talk about gold, because I'm a little disappointed gold broke the 1500 level, but I'm not going to cry about it. It was bound to happen if it was going to happen. And this is going to give us an opportunity to buy lower. I see a great opportunity at the 1440 level that will probably load up on a very big long-term gold, longer-term gold long, targeting the 1640 level now. By the way, for the year, from year's highs to low, or from lows of the year to highs, this would be halfway back for the year. So a very technically significant area for gold at 1440s that it looks like we're getting sold down into. You know, to me, it makes sense that we had a nice bull rally in gold for the first portion of the year, first quarter, first half almost of the year. We're going to take a quarter of the year to consolidate down to that level, and for the rest of the year, we'll re-enter a bull trend that gold typically does. If you look, we'll look back to, you know, this at top happened in April, and we're in July. Let's look back to last April. A little bit April, top happened in May. We consolidated all the way through July, and literally August 1st, you probably just could have bought gold, and uh-oh, froze up here. Anyway, August 1st, you could have bought gold and held it through the end of the year. Gold is very seasonal, and there's very typically a bull rally that begins at, you know, when volume resumes and into the year end. And you can see how here we peaked right in December in gold, just like we do almost every year. We have some kind of top. So that being said, seasonally, gold, 1440s, we're going to be big buyers. Now, 1440s does trade down. We hope it holds on first test. If it doesn't, we're going to be buying as close to 1400 as we can. And this whole gold uptrend kind of has a bullish above bearish below line in the sand at the 1360 area. So that's same anchor, new high for the previous long that has reached its negative 61.8 target. I'm actually going to move over to Eurodollar measured moves for a second, or do our analysis that we typically do on the trend. So this is a 15-minute Eurodollar chart. I want to bring up, make it 20 days, 15 minutes. Back off a little bit. There we go. So from the 141 lows to our recent highs, we've had a pretty nice rally. You know, a good 550 pip rally to our highs. We started our series, traded once to target, twice to target, 3 times to target, 4 times to target. You know, we started, we had our stops at the 1440 level. That was quite silly in my opinion now. Looking back at how this trend progressed, we had our stops at the our 144.20s or even at break even. Because Eurodollar does now look like it's targeting that 146 area. If we fail this trend, if we fail the 144.20s, if we sell down, fail that, we'll have an opportunity to re-enter longs at the 143.20s, 143.25 to be precise. Bullish above, bearish below 144.20 right now in Eurodollar. I want to take a look at the Dixie. Take a look at it on a daily time frame here, because in the dollar futures we technically haven't broken this wedge consolidation pattern, and that's pretty much all I want to point out, because we know that we have a big trend line that comes in up here that could get tested around 78, but more importantly, we are still in this consolidation pattern and technically haven't broke below it. So that does give a little bit of concern that there's a possibility that the Eurodollar and the dollar could see a rally up to 76, where we'll try to sell it again, and basically that would be an A, B, C, D, E triangle that we'd look for continuation to the downside, or the possibility that this is an A, B, or a W, X, and then we're in some kind of Y. There's a lot that could still be going on here. So if we do get a solid break of this trend line to the downside, any break below, you could sell the dollar on a break. This is on a daily time frame, by the way.